Legends, we are live. Hope you're well. Let me just get my screen up and running. Okay, welcome to the Daily Buyer Show, where we dig all charts as they relate to crypto. Crypto is having a nice rally. We're seeing a little bit of follow through from the last week of bullish price action. And we're going to dig into that today. And we're going to specifically focus on how to identify altcoins that are catching rotational flows early. Okay. And we're going to use a tool that I give away for free called the Token Rotation Indicator. Now, before we jump straight into all of that, we'll do our quick round the grounds, and for anybody new here, I just want to quickly lay out my bias so we don't get confused between what is a counter trend rally, which is what I believe is happening now, versus the macro structure on Bitcoin being bearish and what that means. Okay, so I'm going to start by referring to my Substack that I release. I release a weekly Substack, which is my in detail market update, including my bias. Sometimes I include key trades that are standing out for me, high time frame trades. It goes into detail around the macro liquidity picture, what to expect in the week and the upcoming weeks, along with a full crypto breakdown. It's completely free. If you jump on my X, you'll be able to find the Substack link there. So first and foremost, my Bitcoin bias based on high time frame structure and along with some other historical signals is that we are macro bearish, okay? And these are the four key price action signals that tell me that we're macro bearish. Weekly structure's bearish, daily structure's bearish, my TT bands are bearish and they only turn bearish in bear markets. And weekly order flow is bearish. Okay, so price action comes first for me because price action will often sniff out what's happening in the macro and in other markets and quite often will lead. And price action is the thing that we trade. Hence, price action comes first. So if I just quickly jump into the Bitcoin chart and I show you what I just explained, so you understand the macro bearish context. First and foremost, I said weekly structure is bearish. So if you look at weekly structure, okay, this is the bull market that we've been in. And you know what? I'm going to jump right up to here because we can see all this structure. It's old structure. Okay, from this point onwards, we've had here, sweep of the highs, showing that buyers were getting exhausted here, and turns out there wasn't enough demand to drive a new parabola. Now, if you've been following me for the past couple of months on X, I've been pointing out all these cautions along the way. Okay, this was our first sign of caution suggesting that we're not going into a price discovery because we don't have the buy side demand pushing us higher, represented by these weekly sweeps, 1, 2, and then here, the structural sweep. And the key turning point is when this low, our last primary structure higher low, was crashed through. Okay, so now our weekly structure is in a transitional phase where we've gone from bull market, where during bull markets the weekly structure never reverses like what we're seeing now unless we're transitioning to a bear market. Okay, and as of right now, you'll see that since we made this move down, we haven't yet had our next weekly lower high. Okay, so if structure moves like this, comes down, makes a low, makes a lower high, makes a lower low, lower high, lower low, that's what bearish structure does, right? So considering the market structure's already turned over weekly bearish, now our next logical expectation is, based purely on structure, is price needs to come up, because price action doesn't just move straight down like this, right? It needs to come up to create its next lower high, okay, and then move to its next lower low. Now that would be the weekly And I call this the macro time frame for Bitcoin because the weekly structure often aligns with the macro bull market. Okay, so that would suggest that the next major macro move to continue this bearish structure would be a lower high, then continuation down potentially into these lows or lower. Okay, now that was number one. Weekly structure is bearish. Daily structure is bearish. So the lower time frame, typically, if you go back and backtest daily structure on Bitcoin, even daily structure rarely turns bearish on Bitcoin in a bull market. And when it does, there's a greater than 80% probability that we're transitioning to a bear market or a major top, okay? Now, the bullish structure turned bearish. It actually aligned with the weekly structure, so it was up here. So weekly and daily structure are bearish. Now, third signal there, the TT bands, okay? Again, these TT bands are another indicator I created that I give away for free, so just DM me on X if you want them. There's really no rocket science to the bands. I made them with ChatGPT based on a couple of EMAs that I've back tested. And if you just look at the weekly time frame for the bands, you can see that they're very good at confirming when we're in a bear market, right? When the bands turn red, we're in a bear market. When the bands turn green, we're heading into a bull market, okay? Hence, the bands, for the first time throughout this cycle, have now confirmed red, and they're starting to create separation, right? So that was third signal. Weekly TT bands bearish. Now weekly order flow is bearish. The last key signal I'll point out to you, and if you're a crypto investor or trader, note these signals, okay? Note these signals and track them for the macro cycle. Go and back test them yourself, as I have, and you'll see the importance of these 4 signals that if you wanted to be a passive investor in Bitcoin and you tracked just those 4 signals and mastered them, you'd be on the right side of the move most of the time, okay? Now, the final signal was the weekly order flow turning bearish. Now, when I look at order flow, I use fair value gaps as a proxy on order flow. In my on my YouTube channel, if you go to in my building block series, I've done an episode that says reading order flow through fair value gaps. That'll explain what I mean. I'm not going to break it down on here, but just to show you the specific signal, when price made this move up here, okay, you see that was the final expansion into our final range, okay, where the high was created and where the sweep occurred. What I map out is into that final expansion, where was the last major fair value gap, which was here. And if you back test this in historical cycles, this weekly most recent fair value gap never gets inverted unless we're transitioning to a bear market, because what it represents is the fact that buyers are losing momentum and the order flow is shifting to the sell side, okay? Now, I'll just quickly show you, right? If you come back here, you see respected. These weekly fair value gaps are respected until this is the last major one into this expansion, disrespected here. Okay, now when it was reclaimed, that showed that we had potentially some juice in this distribution for another attempt at the highs, which we did. Okay, but then have a look at what happened here. That was your warning when this most recent significant fair value gap got inverted. Okay, hence those are the 4 signals. That's why I'm macro bearish Bitcoin. It's objective. I'm completely objective when it comes to how I approach structure. Okay, I have rules and systems. And if you go through my building block series, I've gone through all of my key concepts that I use. Okay, you can just watch those. So that tells me, based on all of my historical precedents backtesting this stuff, that high time frame structure is bearish. Hence, I'm macro bearish until Bitcoin gives me the right signals to be bullish again. Okay, and when Bitcoin gives me the right signals and I see exactly what I need to see because I know what I need to see, I will change my bias again and I'll be bullish again. Okay, and that's what we all need to be able to do as investors and traders is first and foremost, you need to know exactly what you need to see to determine your bias. And when you see the right reason in the chart to change your bias, change it. That's what you should do. Okay, so hence, where are we at right now? Well, if you remember how I explained how price moves when it's in a bull market or a bear market, right? So bull market is high lows, high highs, okay? Bear market or bearish trend, lower lows, lower highs. Well, based on that, what we're now seeing as expected, and as I've been calling out on X and on this channel through all my previous streams, we're now seeing a counter trend rally, okay? We've seen our first 2 weeks of candles, right? Now, the counter trend rally is exactly that. It's counter trend. It's the retracement, right, in structure. I'll just draw this actually up here. It's the retracement in structure to go lower again, okay? So here, this is the part that we're seeing now with the expectation that for this structure to continue bearish, it's going to push down again, right? So these are the counter trend rallies, okay? Here, these are the retracements in a macro bearish trend. Now, if you're a trend following trader, okay, you're not a counter trend trader, you don't want to be trading these retracements. You want to be catching these moves, the continuations, right? Because then you're following this trend, right? However, if you are a trader who can trade counter trends, right? And you know what you're looking for, you have your systems, your strategies, this counter trend rally potentially has the fuel to be a big rally, okay? Now, for me, as I've called out in my Substack, how I'm personally trading and playing this situation right now is I have already exited all my major spot bags and macro positions when I saw all these signals, okay? I'm personally only holding now my, what I call is kind of like my forever Bitcoin, my long-term Bitcoin in retirement accounts, basically. Okay, but how I intend to play this counter trend rally is through swing, right? I'll swing trade these primarily through futures and perps, okay? Because the next move that I want to catch, the next major move that I want to catch is this one. Okay, the continuation of the macro bearish trend, right? But again, coming back to this counter trend rally, we've been talking about on stream the potential liquidity catalysts that we have to drive quite a significant counter trend rally. Okay, and I'll just go back to, again, my Substack, which lays it all out, right? And we have these key liquidity catalysts where we have speculation of QT ending in December, possible TGA shift from refill to spend. So the TGA is basically the government, right? Rate cut in December. Now, these are all well and good as speculations. The way that I approach markets is I need to see it in the data, right? And what I've done to be able to see this in the data is I've combined the 3 points of data where you track these three things into one indicator called net liquidity. Again, another free indicator that I give away. And if you want it, just DM me on X, right? So what does net liquidity indicator show? It actually shows us the Fed's balance sheet so we can see whether they are tightening or they're easing. So QE, the term you've probably heard is quantitative easing. That's essentially money printing, right? It tracks the TGA, so the government, which is basically like the government's wallet. So if the government's wallet is refilling, it means that they're not spending money. If the government's wallet is depleting, it means that they're spending money. And it tracks, it actually doesn't track the rate cut itself, it tracks the reverse repo market, which is kind of like a risk sentiment gauge to understand if banks are parking their money at the Fed or if they've got the risk appetite to take it out into markets, right? So it measures how much money is getting parked with the Fed. So those three combined give us this really nice net liquidity indicator down the bottom here. See this one that turns green and red based on if it's rising or declining? This is what we track to understand whether liquidity is actually flowing in markets and whether it's actually expanding, right? And you can see here in the past, when liquidity expands, okay, you get the massive parabolas. Okay, so expanding liquidity, massive parabolas. Now, I've plotted over net liquidity the funding rate, the Fed funds rate, because the thing with the funds rate is you cannot just alone look at the federal funds rate because that is just the price of money, right? So when the Fed changes the rates, all it basically does is set the interest rate that participants in the markets or anyone taking a loan, right? Ultimately, it filters through to banks, so it comes down to anyone taking a loan. Obviously not directly with the Fed, but anyway, the filter through effect is it essentially just makes loans cheaper. So that incentivizes people to go out and take risk, okay? Now, why you can't just track the federal funds rate alone is if the funds rate is coming down, but there's still no risk appetite because the market is worried about recession or anything else, then they're not going to go out and take the risk. It doesn't matter how cheap the money is if they don't see a potential reward out there in markets. Okay, so hence, while the funds rate will often align with liquidity, right, because it does stimulate risk appetite, there are still other underlying factors. Hence, which is why I built the net liquidity indicator, just to aggregate those other key data points so we actually know when liquidity is flowing into markets versus when it's not. Okay, so tying it back into this counter trend rally, right? Now, if these liquidity catalysts come into fruition, okay, it could drive what I say is short-term liquidity. Because why I say it's short-term liquidity is first and foremost, QT ending, it cannot be mistaken as QE starting, right? There's a big difference in the Fed saying we're ending QT versus the Fed saying we're starting QE, right? Because if we go to the balance sheet, when the Fed says they're starting QE, that means they're actually starting the money printer, right? Now, when the Fed says they're ending QT, but they haven't said they're starting QE, unless they do some other type of stealth QE that they don't actually call QE. Again, this would be one for maybe the economists and the professional macro guys. Unless there's some other way for them to increase, like stimulate money or print money by way of stealth or whatever, just ending QT, you'd expect that the balance sheet will stop declining and should flatten out, okay? Hence why I think it's more so aligns with short-term liquidity, because we know that we need balance sheet expansion, which will drive net liquidity expansion, okay, which will drive a parabola. So just a simple flattening out of the balance sheet may not be enough liquidity to drive a full new parabola into price discovery, right? Hence why if we continue to track net liquidity and in the Fed's balance sheet, because they are doing, call it these other stealth QE mechanisms that just haven't really been branded as QE, call it, straight out QE, if you do actually see the rise in the balance sheet, we'll see the rise in net liquidity, and that's where we will be paying a lot closer attention to structure on Bitcoin, because if the structures then turn bullish, then we have liquidity aligning with price action to confirm that there's a much higher probability of a new expansion and a price discovery in Bitcoin. But as it stands right now, it's just speculation of QT ending, so not QE. So I'm not expecting the balance sheet to just race up. Okay, point one, hence short-term liquidity. Point two, the shift in refill to spend. Okay, so if we just, again, look under the hood of net liquidity and we go to the Treasury General account, this is essentially the government's wallet. We've seen that they often fill to this $1 trillion level, which they've hit, and we've started to see the turnaround. Okay, my question is, even if they start spending without QE and more aggressive rate cuts to bring rates much lower, because remember, we're still in a very high rate environment compared to previous cycles. Okay, without the aggressive rate cut, is this spending enough to drive a new parabola? And realistically, I don't know, but I know the past formula, the recipe for the parabola, has been spending plus balance sheet going up, okay, not just flattening. Hence, again, it all just comes back to net liquidity. That's why I built this indicator, so we don't need to go digging through all of those things all of the time. We can just monitor net liquidity, and what we want to be seeing is if this continues ticking up like this, along with Bitcoin starting to establish and shift structures bullish, that's when we can actually start being more macro bullish when the charts tell us for a new parabola. But as it stands right now, I believe that, we'll come back to our Bitcoin chart again, those catalysts that I just described have the potential to give us potentially a big move, right? Maybe even somewhere up into the bands here, maybe even somewhere as high as here, okay? But ultimately the structure still, to me, in my current view of Bitcoin structure, screams that it's going to turn over. This is going to resolve into some type of lower high. Okay, from a structure perspective itself, we got to remember that the current weekly high on Bitcoin is here. So Bitcoin can counter trend rally all the way up to here, and the weekly structure still is bearish. Okay. Now, the only way it will turn bullish sooner is if it creates a new lower high. So let's say it rallies to here, then it puts in the new low, okay, like this. And best case scenario, it's a weak low, right? An SFP like we see up here. And you kind of want this exact same signal, which is the same here. Did the same thing here where it came, flipped the structure and turned over. That's where if we see this, then our primary high drops to here. And if Bitcoin then gets back above here, then we shift our weekly bias to bullish, right? But again, as it stands, because the primary high remains up here for the weekly, it means that there's plenty of room for a counter trend rally, even, you know, right up into 100K. Now, I don't know exactly how high it goes. We'll observe price action and we'll break it down on the daily live as it happens. But as it stands, price can pull all the way up into here and still turn over and be bearish, okay? Sorry, even before it turns over, the structure still remains bearish. Right, so that took me a little bit longer than expected, but I just wanted to cover in detail my bias, because some of the next things that we talk about when we're looking for stronger altcoins and spotting the stronger altcoins and which ones are catching rotational flows, we got to remember the context that we're just playing a counter trend rally. Because during this counter trend rally, we're already seeing the signs of altcoin outperformance, meaning that altcoins will likely outperform, right? So that brings me back to, specifically for the way that I trade my systems, I'd like to be participating in that outperformance over Bitcoin at this point in time, right? So the last thing I'll note on that, however, is that we have to be aware that wherever Bitcoin finds its high, whether it's here, whether it's up here, okay, when we're seeing those signs of exhaustion and when it's potentially rolling back over, we need to GTFO out of alts, right? Because alts are gonna look horrendous, right? If this rolls back over, they're gonna be shocking. So we've got to be very, very rotational. And again, I'm going to show you the system and the rotation tool that I've built to help us do this. We've got to understand and have expectations set correctly to be in and out and to be closely monitoring Bitcoin structure, because we're playing counter trend rally. Okay. Now, before we jump straight into the alts, let's do our quick round the grounds on the macro charts. Okay, we'll make this quick. Okay, because I know we dig the macro charts almost every session, and altcoins are in the limelight at the moment. So first and foremost, we're seeing that little bit of uptick in net liquidity that has been on a downtrend since July. Okay, so we're still monitoring that, and we should have fresh data coming in tomorrow. If we just head up here, we'll start with, we'll just go straight into the US 2-year, because our rate cut probability is still very high, okay? That means the market is still expecting a rate cut in December, okay? Now, again, the main thing we got to remember with the rate cut is, at the current trajectory of cuts, that's going to be the last cut till April next year, okay? So again, hence aligning with my short-term thesis, where we're potentially in for a Santa rally, and if it ends up being a big rally, okay, like Bitcoin did in 2022, if it ends up following a similar pattern, okay, this was from Jan to March 2022, okay, so if you come back to the Fed watch here, we've got a rate cut in December that's all but certain for next week now, and then there's no next rate cut till April. Hence, does that catalyze the rally potentially into Jan, and maybe if it's a bigger rally, longer, right? The Santa rally. So we look at the 2-year, because the 2-year is kind of the market's gauge or speculation on the trajectory of rates, or call it on the trajectory of liquidity conditions, I say. And we want it to keep maintaining this downtrend, because when it starts heading up like this, the market is not expecting tighter liquidity, right? So we're watching that, and I like to just look at the spread between the 10-year and the 2-year, okay? Because I just find sometimes that's just a nice signal. Ultimately, it just means when it's rising, market's expecting easing expectations of liquidity, good for risk assets. When it's declining, recession concerns. And if I just overlay Bitcoin with it, you'll often see a pattern here where you can see when it's generally heading up, as the market expects loosening liquidity or easing expectations, Bitcoin's moving up with it. So I'm just monitoring this range at the moment, because if we start breaking down from this range, that tells me the market's expecting tighter liquidity, or worse, potentially recession concerns. And that's likely to cut short any kind of rallies that Bitcoin has. Right, so right now we're still in the range, like no red flags on either side. Okay, DEXI, we're still observing that cycle ending pattern. Just read my Substack for this one. I won't dig into it. All right. Now, what we've been making note of is, as the rate cut is coming in next week, we can already see it is driving some weakness in the dollar, right? Now, this can keep trending down all the way down to here and still not invalidate the pattern. However, I anticipate a move just from here to here is likely to align with a counter trend rally. Now, the thing with the DEXI that we do need to make note of is, just because it's going down, obviously, if you just look at historical charts, there are plenty of times where weak dollar means risk assets pump, but there is context that you always just need to consider, because if weak dollar is not because the market is taking on risk, but because the market has concerns about the US economy, risk will collapse with the dollar collapsing. Now, if you go back to 2007 leading into the GFC, you'll see that. And I'm pretty sure I painted that on the last stream or the stream before, right? Just to give you that example. Hence, my current take is we're rejecting at the highs here. To confirm the pattern, we'll see a macro trend this way, and this will align with deep bear market. But in the short term, this kind of price action from here to here is likely to align with counter trend rally, okay? And if we do get somewhere down into here, that's where I'm going to be on watch, because if it starts, this pattern can still do this, turn back over and still lead us into a big bear market. So we'll keep that back on, that'll be on watch over the next, ongoing right now. If we jump into the indices really quickly, the VIX is coming down, right? So implying a little bit less volatility as we saw it spike into that correction. Okay, now right now that's looking like it may have just been this kind of bid into risk, because we've been on watch for these this structure low that was tested with some band confirmation here that suggests there was more momentum, or it's just a higher cautionary sign. Now, in my opinion, if it is a big distribution, we're still not out of the woods. We need to actually see it trending into all-time high. But we're seeing a strong bid come through. Like, look at the consecutive days up, barely any days down, and this is consistent across all the indices. So right now, high time frame on the weekly never turned bearish. The daily structure is tested, but that's okay. We never got a confirmation. So far, we haven't got a confirmation or follow through that the daily is turning bearish. And this is across all three key indices. And the Russell, one of the key ones I look at to understand breadth of capital deploying across markets, because the Russell is the 2000 index, right? The smaller caps. We're seeing strength there as well. So again, the strength here supports the counter trend rally thesis, in my opinion, right? Now, if the NDX in particular is one that I track as it relates to crypto and Bitcoin, and again, there's a historical ending pattern where at the end of crypto cycles, the NDX tops 280 days before Bitcoin, present in the last two cycles. So that's just the main thing I'm monitoring at the moment, because the forecasted top based on the current pattern is around about end of March, again, which is timing is pretty funny that it's aligns with a potential seasonality counter trend rally. But anyway, if the NDX was to roll over sooner, then it's likely Bitcoin also rolls over sooner. Okay, so hence it will cut short any counter trend rallies or bounces that we're having if it rolls over sooner. That's it, legends, on the macro front. All in all, just to quickly summarize, so far everything is supporting, all the data is supporting our counter trend rally thesis when it comes to the liquidity so far and the macro, right? The macro charts. So let's go straight into crypto. Now, our first most important chart at the moment is stablecoin dominance. Because again, if stablecoin dominance is increasing, it means that internal liquidity is leaving tokens and moving into stablecoins. So you can see here when it trends up on the weekly and with weekly bands green, again, these are just my TT bands, that means we're in a bear market. Now, we are following that pattern where the bands have turned green, the weekly structures turn green, and we're testing this range high where in the past, this was deep bear market, okay? That's what's on watch here, because if it heads straight up and keeps heading up, trending up like this, alts and Bitcoin will go much lower. However, we've now created plenty of room from here to even just the bands and even right down here to have a massive counter trend rally. That would be a massive rotation of liquidity into tokens. Okay, so that's what's on watch. And I'll just quickly point out last cycle, when we had the counter trend rally, we see it here. Okay, this is that Jan to March counter trend rally. You'll see that we had this pullback, but the bands stayed green and structure never followed through on the weekly. That's how we knew that we were still going into a deeper bear market, and that it was just a counter trend rally. Okay, so that's what we'll be observing this time. If the weekly turns over meaningfully and the bands flip, okay, that puts more probability into a potential bullish reversal, right? Again, we'll be monitoring price action in Bitcoin specifically at that time and the external liquidity bid in net liquidity. But if we see that it's coming down, it's testing the bands, and it's then going to turn back up, that's just our counter trend rally. And when it turns back up, that's capital rotating out of tokens again. And again, that's the signal we'll be looking for to start exiting any counter trend positions that we're in. I'll just clean up this chart and then we'll jump into very quickly Bitcoin key levels, because we've done this over and over. Actually, you know what? We won't do Bitcoin key levels today. They're here on the chart. All we'll do is I'll take them off the chart, okay? And just, actually no, I'll put them back on the chart. Sorry, all over the joint. I'll just point out, okay, some of the key things I'm looking for so that you guys can be aware of levels. Right, now we're coming into this first area of expected resistance, which is the yearly open. Then we're coming into that order flow. So remember we talked about the inverted gap, right? This is now our sell side gap. Okay, so we expect that there's probably going to be resistance into there. And at the same time, the bands are coming down, okay, as they separate. So this rally, maybe it goes straight into the bands. That's what I'll be watching. I'm watching where it is currently. And ultimately, I'm just watching price action as it develops. This quarter, which is basically just December now, the most bullish thing that bulls, or call it the bulls, could do to kind of start rebuilding some serious momentum would be to close quarter 4 back above Q3 lows, because then at least that'll give us a sweep of Q3 lows. Okay, so then if we come onto the quarterly, that'll at least give us a sweep of Q3 lows, right? Which can potentially set up some more bullish price action. Okay, potentially I say, because we've already had the sweep of the highs, so we'll need to assess it at that time. But at least if they recover that, it's not going to close as such a strong bearish move, which historically aligns with bear market. Okay, so that ultimately is a major tip of the hat to the bulls if they reclaim that by the end of this month, essentially. Right, so again, we'll monitor here what happens here, we'll monitor what happens here, and we'll monitor what happens into here. These are the key levels, and they're noted in my Substack. Right, now, as it relates to current price action right now, this is us. We've confirmed our first week of bullish price action. Now we've got our second week of bullish price action, okay? But we've swept both the lows and the highs of last week, right? So here's where we'll see who's really in control in the short term, because if we reject off the highs here, okay, it means that sellers are stepping in meaningfully. Potentially, and we may still need to target back down to these lows, and it could be a shorter pullback, right, in the shorter term, because the sellers have already attempted to push down here, okay, but failed. Buyers stepped in. But if the buyers can't keep driving us higher to at least close this week bullish, okay, it tells us that there wasn't a very strong surge or demand on the buy side to at least even take us above last week's highs. So hence, outside bars are a bit of a tricky kind of stalling candle, right? Where I don't get clear actions from outside bars, because it's kind of a bit of an exhaustion of either side. No one's taking control. And quite often, if we're left with an outside bar, the next week, I want to see if anybody sweeps early in the week and then takes over. And then it will give me more of a signal that if it happens at the highs here, the bears or the sellers are in control. Or if it happens down the lows here and then recovers, then it tells me the bulls might be in control. Okay, so hence we're observing as we lead into the weekend how this inside buy is going to resolve. And we got to remember that leading into FOMC next week, we're up for volatility. Like there's going to be volatility because right now what participants are doing are potentially front running the rate cut. So if the rate cut is front run, quite often that means when the rate cut actually happens, we might see some bearish price action. And what happens after that rate cut, especially when Jay Powell talks, is where we'll most likely see where the true move is going to happen. Okay, so after the FOMC next week and into week 3 of December is likely where we'll see the major trajectory for the rest of the year and probably into at least January Q1 sort of thing. Okay, so hence we got to be careful of the current volatility this week, and that's why if this week I'm just going to be observing how this closes. Now, if it closes massively bullish, that sets up next week a lot better, right? Because it shows us that there's strength in demand and buyers stepping in. So that kind of lays our context for Bitcoin, which lays the pathway for alts, right? Now, let's get into what I was discussing and what I mentioned at the start on how we go ahead and identify which alts are catching the early rotations, which ones are catching strength. I created this token rotation indicator. I'm not going to explain the ins and outs of it right now because I've got a video. I've explained it in other streams, but I've got a video on my channel in the indicators section specifically for the token rotation indicator. It breaks down how it works, how to use it, all that sort of stuff. In a nutshell, all we're looking for is we're looking for the 1 day to the 1 month to be lighting up green, and that shows that the particular asset that we're looking at or token that we're looking at is outperforming the majors on a relative USD percentage basis. Okay, so that says to us when these lower time frames are aligning, turning green, that says capital's rotating in. When these time frames are turning red, it means capital's rotating out. Okay, so ENA caught my eye because first and foremost, this is not a technical analysis tool. It is a kind of like a torch in the dark. It helps you spot which tokens are catching the early flows, and then you investigate those tokens further for your setups, right? To see if you've got your right setup and the chart looks good for you to trade, okay? And then what you do is you simply avoid the tokens that aren't catching rotational flows, because that just means they're more likely just having some type of exit pump or you know, whatever you want to call it. A good technical setup supported by rotational flows is what you want to be looking for to know that you're trading with capital, right? With the flow of capital coming into the asset, and obviously with your trading strategy, right? With your system. So you just have that additional context. So I'll quickly, before we jump into any specific charts, I can just quickly go through here, and I've got this list set up of, it's actually about 70 or 80 of the biggest market cap coins along with some other popular coins, right? ENA. I'm interested in ENA, right? Because I'm interested in ETH at the moment. I laid out in my Substack, and ENA's ETH ecosystem, so it's potentially ETH beta. And I'm seeing rotational flows come in, right? Over the course of the last month. And for me, when I look at this chart, it's starting to show me some signs that I'm interested in a potential setup. I'm not going to go into specific setups on here right now. I just want to first show you guys just how to just flick through many tokens and find the right, find the strong ones, right? So you can avoid the junk. AVAX, no rotational flows yet, okay? It's not catching rotational flows. You want to see at least 14 days and then onwards lighting up. 1 to 3 days is nothing. It could just be daily, because this is real time, right? So it could just be exit kind of behavior. ZEC, this is showing you exiting capital, right? This is rotating out. Look, right up until the 1 month, you've had straight underperformance. So this is showing you capital is moving out of this coin into majors, right? The majors are outperforming. This is a distribution, a massive distribution, right? For the whole year, anytime within the last year, if you bought anytime 2 months ago till the last year, okay, you're outperforming Bitcoin, ETH, and Solve by at least 130% if you bought 2 months ago. 5 months ago, 800%. However, if you bought any time within the last month, you're underperforming significantly. Hence, if you're still holding ZEC, right, and you're believing that it's going for a new parabola, well, the capital flows are not showing you that it has the strong rotational flows to support that thesis. So in my opinion, ZEC's kind of done now. It's heading down, like it's distributing. Okay, that's without going into full technicals on this, but you can just clearly see it first and foremost in the rotation here. Okay, it's had its time here and now capital's moving out of it. BCH, I think that's Bitcoin Cash. It's been strong the whole year and we're seeing a little bit of red, but this is not meaningful, right? It's the 1 to 3 days. So it's still holding some relative strength. So you might be looking for a setup there. See how we can just easily flick through charts? Link, great. I'll be interested in this. And I am again, because it's ETH ecosystem, right? And I'm interested in ETH at the moment because of the setup. Link looks good. That's on my watch list. Tau, oof. It had, you can see at this pump, it had a very short rotation. Okay, so if you were using this indicator and you were trading Tau like I was, I actually shared it in the Spec Traders Discord. That's where you can find me at the moment. Okay, if you were trading Tau, I remember actually sharing the setup down here. When Tau was having this rotation, okay, what you would have seen is that when it was about 2 months ago, you would have started to see these timeframes light up red, and that was your signal as it was kind of topping and then starting to pull back that the flows are no longer supporting the move, okay, and capital's moving out of this token. Hence, I got out of this thing all through here. I don't think I actually stuck around for this final move. I think I got out of it somewhere here and I traded it. I remember trading it just after the liquidation event because of the relative strength, even just on that liquidation, I remember at the time. But I exited somewhere through here. But that was, a lot of that was based on the rotational flows that I saw coming through to it. But now it's showing you that it doesn't have rotational flows. Like now it's capital's exited over the last month. Mantle. Okay, so it's showing you that Mantle, look, it had some type of massive parabolic move. It lost rotational flows, but it's gaining traction again. So personally with Mantle, I'd be a bit cautious because when a chart's already had a parabolic move like this, especially into current context where we're expecting this to just be a counter trend for a lower high, then it's not logical to expect this chart to go into a new high. Okay, however, if it continues to show flows, and I believe it's still an ETH ecosystem token, so if ETH does well, this will do well. However, if your expectations are that it may come into a nice move like this and you've got a technical setup for it, and we can see some capital flows coming through to support it, then you can make it potentially a really good trade, right, in this counter trend. LDO, I believe another ETH ecosystem token. And here's a perfect example. Whilst I'm interested in ETH ecosystem tokens, I wouldn't touch this thing. Look at it. There's not been a single time in the last year where it's outperformed the majors. So if you bought this thing any time in the last year and you're still holding it, I don't know why you're holding it, to be honest. Because look, you're underperforming the majors on every time frame, and we're not even seeing any capital flows come through. SHIB, slightly outperforming Bitcoin in the last month, but why would you touch this when you can just get into ETH and Sol potentially and trade those, and they're still outperforming this? So again, not that interesting to me. BERT, at this point in time, is that BERT? Yeah. not that interesting to me either. We're not seeing the flows coming through, right? We can see it had some really good flows from 4 months to 11 months ago, but then capital rotated out of it and it hasn't caught the flows, consistent flows since. We don't need to do ETH, but you can see that it's catching flows. Hence, I have called this in my Substack. I've laid out that this is one of the main counter trend trades that I'm looking for. Okay, in terms of the majors, I don't share any of the swing trading stuff and the lower time frame stuff that I'm doing online because it's too easy. There's too much management or handling that I do personally that I'm just not going to share all the time. I don't want to lead you to the slaughter. But these bigger macro, staying on the right side of the macro kind of trend and moves, that's what I'm trying to share with you guys. But DOT, why would you touch this thing, right? It's catching no flows and has caught no flows for the last year. Pepe, right? What an ugly chart. Some flows coming through, but it's caught pretty much no flows for the last year, right? And look at this massive distribution. Like this was it for Pepe, right? You can see it. There's the parabolic move. That's when the token season ended for this coin, right? AEST, I think that's Axie Infinity, hasn't caught any flows, and the chart just looks horrible. TIA, horrible, right? Look at that. No flows in last year. Chart looks horrible. Let's just flick through the horrible ones. Okay, BNB is a good one to just use as an example here because BNB has been relatively strong the entire cycle, and when we put on total to market cap, we can see that every time Bitcoin had and the market cap had its major expansions this cycle, so did BNB. So that's relative strength, okay? Now, we got to remember context that we're going into, again, potentially this phase for a lower high again, but Bitcoin has been strong the whole cycle. We got to see if flows come back through or if it's done, because if it doesn't start catching the flows, it means that it's now out of the limelight, and for this counter trend rally, this is going to be more of a sell the rip, right? Rather than trade the counter trend, right? Because we don't know, it doesn't look like, it looks like the parabola's already done, okay? Or if you want to, like, wait for the flows to come through, I'd be waiting for the flows to come through and then just have the right expectations for it. Okay, RV or RV, good, we're seeing some flows coming through. It's an ETH ecosystem token, all right? It's making some internal bullish structure. I say internal because this capitulation, which makes the chart a bit ugly on the technical side, right? Since then, we're between this low and this high. This high and this low. And this is all technically internal structure. So we don't know if it's just going to come to here to drop further. But anyway, if you were interested in RV, you can see that it is catching some flows, right? So that might be a token that you look further into for your particular, if you can find a nice A1 setup for it. Filecoin, no flows. Move on. Sui, 14 days of strong flows. Okay, so Sui might be one where you now go in and investigate further. It's an L1. You might have a good setup there. Okay, it's still got some type of relative, what would you call it, like attention, right? It's still talked about from time to time, so that might be a good one for you. But it's showing relative flows. I like to see it reaching into 21 days, one month, with the structure also supporting, and that would be one that's showing you that you've got a potential good setup if you have it, as well as you're trading with the flows coming into it. Sol, all right, not outperforming ETH consistently, but it's catching some flows. I am interested in a Sol setup, right, because I think there's an interesting setup there, but not as strong as ETH in my opinion in terms of the setup that I personally see. But AR, not really seeing much to be excited about. No rotational flows. And you get the picture, right? So easily you can see how many coins just out of doing this process that I've weeded out now, right? So many of these I'm just not even going to touch because the data's telling us that we shouldn't be touching them. They're not catching rotational flows. The ones I am interested in touching, ENA, we got rotational flows, Link, rotational flows. What else did I see with good rotational flows? I think those are two of the majors. RV was looking interesting. So I might explore this one further, but it's not as clean as ENA, right? And Link, right? Look at that. Consistent flows. In the last month, it's consistently outperformed. And I think Sui was the other one that's showing the early rotation signs. So Sui, I've put on my watch list already. I'll be watching over the next 21 days, then 1 month, if the setup keeps aligning, right? That's it, legends. That's all I had for this session. Again, if you want this token rotation indicator, completely free, just jump onto my X, shoot me a DM, and I can hook you up with that, along with the other indicators like net liquidity and my TT bands. There's videos on my YouTube explaining how to use them and breaking down exactly what they are. Legends, I hope you got something out of that session. I'll be back again tomorrow at the Bitcoin close. Please like, subscribe, drop me a comment if there's anything you'd like to see in a future video. I appreciate you, and we'll catch you on the next one. Cheers.